Our next speaker is someone who really saw a change coming and acted on it and has created the market leader in the space. And he is going to talk about not where his company's gone, but where it's going. So please join me in welcoming the CEO of Betterment, Jon Stein.
Hello, LendIt. It's an honor to be here. I want to thank all of the conference organizers for asking me to come and speak, and also thank all of you for being here today to come and hear me. Appreciate it. They asked me to speak about a little topic, the future of financial advice. We can cover that off in 5 or 10 minutes, I'm sure. It's as I think about this topic, it's a huge one, and you surely know Betterment as an investment advisor, and I come at this from the lens of the investing landscape. But when I speak about the future of advice, I do mean, in general, financial advice across all products. And so some of you who may be more familiar with, say, the lending space or the banking space or payments, I think this ultimately applies to everything that we're doing, because I think the full financial landscape is changing in some similar, repeatable ways. So first off, who am I, and what is Betterment? How many of you have not heard of Betterment? Raise your hand if you have not. It's a handful. Okay. Betterment is the largest independent robo-advisor. Today, we manage over $8 billion, even this chart is a little bit out of date, for 240,000 customers. We're growing faster and faster all the time. This has been a very exciting year for us, as we've just had the 2 best months in our history. And our mission is to empower our customers to do what's best with their money so they can live better. We are the only company that I know of that is working every day, all the time, always to maximize your money. And I'll come back to that concept as we talk about the future of advice. So that's me and Betterment. I'll talk first, when we talk about the future, we like to go back to the past. We like to think back to what trends have we seen and use that to inform our view of what's going to happen in the future. Technology has long driven change in financial services, as society and regulators respond to the technological innovation. So if you start back in the 20s with the bucket shop era, obviously the crash of '29 ushered in a lot of new regulation and change. The first exchanges, the regulation of the first mutual funds, and so on came out of this time. And in the next 40 years, with the telephone, we saw a popularization of the old style of investing. You think of that as maybe buying AT&T and holding on to it for your entire life. That's how people invested at that time. But more and more people started doing it, which was great, and so investing was democratized. And then in the 70s, we had a lot more change. And it came about with the invention of the computer. We started having the ability to do index funds and track indexes of things. And so we had the first index fund at this time. We started being able to computerize trades and automate some of these processes. And so we saw commissions come down as a result. And over the next 40 years, a couple of things happened. The cost of diversification, of building a globally diversified portfolio, fell to 0. The cost of trading, of transacting in equity markets or even other markets, has fallen to near 0. And so the old business models of charging people to trade or charging people to diversify don't work anymore, because those things are basically free and should be free. And so when we think about what is the future of this industry, what's the future of financial advice and financial services, one thing is that we notice is that individuals are increasingly responsible for their retirement, and they want advice. So while things are cheaper and easier and more commoditized, the world isn't any simpler. If you have a retirement plan at work, it's most likely now a defined contribution plan. It's not a defined benefit plan. And you're living longer than ever before. Good for you. But that means that you have to do more to plan. And we are not very good at planning for the long term. We humans are not very good at this hard, difficult thing about looking 50 years into the future to decide, what should I do with my money? So there's an opportunity here because 83% of 401k plan participants say they want more advice, which is effectively everyone, right? Everyone wants more advice about what they should be doing with their money, at least everyone who knew how to answer the survey. But that advice is expensive. It costs on average $10,000 per person per year to deliver fiduciary advice. So obviously that's not accessible to most people, and only 0.2% of the mass market has a fiduciary advisor as a result. There's a gap there. Everyone wants advice. No one's getting it. What do you do about that? It's obvious, right? You find a way to democratize. You find a way to deliver advice to more people. So I will talk about how financial advice is evolving in this world where we're trying to deliver it to more people. And I'm going to talk about it in 3 themes. 1, that it's becoming more accessible. That's the more people part. 2, that it's becoming more intelligent. We can do more for you, the more data we gather and the better service we can provide. And finally, that it's aligned. And I'll end with that and some closing thoughts. Accessible. Advice will be available to everyone. When we think about our market, we see a massive opportunity to make investment advice accessible. If you look at the US market for investment advice, the green is the households with 10 million plus of assets. The gray is those in 2 to 10, and the blue is those with less than 2 million of household assets. Traditionally, advisors have targeted the top couple of segments. If you're at UBS or Morgan Stanley, you love bringing home those clients, and in fact, you're trying to fire the blue clients. You just want to get them off your books, and the company is actively encouraging you to do so. If you're a fiduciary financial advisor and you're out there in a mom and pop shop, you've set up your shingle, you love it when you come across somebody who's got at least 2 million of household assets. People below that, it's hard to make it work. Maybe you give them a one-time financial plan, but you can't really manage their money for them because there's just not enough money in it for you. And so at Betterment, we saw this amazing opportunity to go after the folks in blue and build a product that would work for them, that would help them better manage their money. And by the way, we're getting a lot of the people in the gray bucket to come to us at the same time because they're seeing that we're lower cost than anything that's available to them. And in many ways, we're better than the traditional solutions that they've seen. So the opportunity is there to make this scalable, cost-effective advice platform and grow up this stack. Customers should have access to more advice through multiple channels. So our primary product, the thing that Betterment is known for, is having the industry-leading digital advice. That is where the vast majority of our customers come from, and why they're coming to us today is for that. But on February 1, we announced that we now also have productized our human advice offerings, which we've always had, by the way. We've always offered CFPs and advisors on the phone. We've always had 7 days a week, regular customer support, plus experts who can answer your questions. But customers weren't aware of that, and they were calling us a robo-advisor. And when you're just a robo-advisor, people think that that means there's no humans. It's always been about the best humans and the best technology. And now we're making that clear, that we've got the humans who can answer these questions for you. And so for, say, 25 basis points, you get all the digital advice you want. Everyone gets that. And for a little bit more, for 40 basis points, you can get a call with a licensed financial professional. Once a year, you can talk to them about your full plan. If you want unlimited calls with a CFP, that's 50 basis points. And so these offers are more cost-effective than anywhere else in the industry, and you get better advice because it's driven by this core technology platform. We've made it more accessible. As finance has become increasingly complex, customers want to have financial confidence. I bet some of you in this room are pretty confident about how you manage your money. You think you've got it figured out. You know what you're doing. I'll tell you, I was a consultant to banks. I have a CFA. I studied economics as an undergrad. I've been telling people how to invest their money for years. And when it comes to managing the details, I still find it really complicated. Gosh, should I do that deposit monthly or every other week? And should I think about putting more money into my Roth or my traditional IRA? These are tough questions that involve a lot of analysis. And we've automated a lot of that analysis for you to help you optimize and maximize your money in ways never before possible. That gives you confidence that you're doing the right thing, which when we talk to our target customers is what they want. They want to know that they're making the most of every penny. They want to know that their hard-earned money is working hard for them. And the traditional industry can't give you that. It's just like, yeah, we'll sell you what we've got. Removing product and user frictions will attract more customers too. When we talk to our customers, not only do they want confidence, but they also want everything to be easy. They want it to be seamless. They want that kind of great customer experience that they're used to getting from other technology companies, but never have seen in financial services. So for instance, we introduced the industry's first and only completely paperless rollover service. To this day, we're the only company that offer this. We've done this for 2 years now. You just e-sign, you click, that's it. Everything else just happens. You don't have to get on the phone to us, to your existing provider. You don't have to sign any medallion signatures or notaries or things like this. We are the only company in the industry that does this, and it's because we've reimagined what financial services should be from the ground up, and that involves removing these frictions. That's what we've heard from our customers. Intelligent. What do I mean by intelligent? Holistic advice and planning will put power in the hands of investors. The more you know, the better you can do. The more we know about you, the more we can maximize your money for you. Customers expect that they get the best financial planning and wealth management to help them make smarter decisions. So we look at each customer as an individual. We don't use, one target date fund that we apply to all 240,000 customers. Every customer has a unique portfolio. There are no two customers alike at Betterment. Everyone has a unique allocation. Everyone is tracked to maximize their own tax advantages, geographic advantages, et cetera, et cetera. And it's based on what you want and what you're saving for. So if you're saving for a safety net or for retirement or you just want to build wealth, we'll create different portfolios for those things and manage them to meet your needs. Customers are being educated to look for the best long-term after-tax returns. I don't have to sell people on the idea anymore that taxes are bad. I mean, nobody likes paying taxes. That's a pretty easy sell. I don't have to tell people pay less in fees. We can thank John Bogle for decades of telling us to pay less in fees, and that message has gotten through to folks. Today, people expect these things. They're looking for it. They're saying, well, why am I not getting the lowest fee? Why am I not getting the best after-tax return? And that plays to our advantage because we're able to deliver on that proposition in a unique way. And anyone who wants to play in this space is going to have to do the same. Over time, personalized tools will increasingly guide customers on how much to save and whether they're on track. This is an example from Betterment's Retire Guide, and it asks, how much do you plan to spend in retirement? Well, we'll estimate for you how much you likely want to spend in retirement based on your income, based on your Social Security, based on your spouse and their income and their assets. We track the value of all your outside assets. We'll track the value of your pension if you have one. We take all of this into consideration in coming up with what's the right amount for you to spend. You can change that if you want, and based on that, we'll tell you how much to save, which accounts to open, how much to put into each, and manage all of that over time as things change for you. That's holistic planning. That's intelligent advice. That's the kind of thing everyone in this room should have. You probably don't have it, except unless you're a Betterment customer, I almost guarantee you don't have it. It is a shame that we are all so complacent with the way that we manage our money these days. The industry has led us to think that it's not their job to help you make the most of the money. It's their job to sell you a mutual fund or just transact for you. That's not the case anymore. The future of advice is actually helping you to do more with what you've got. These tools become more powerful all the time. Already today, we're doing all of this advice and management for you. And late last year, we launched this tax-coordinated portfolio product, which is unique in the industry. We're the only ones who do this. It delivers annualized tax alpha in the range of 0.1% to 0.82%, depending on assumptions, and the assumptions there are what's your tax rate. If you're in a high-tax place like New York City or San Francisco, it's almost 1% per year that you're going to save from this every year, reliably, repeatably. Tell me what other investment service can offer you that kind of alpha. There isn't one. So, and people should expect this. It should be a fundamental part of any investment that you're considering, but it hasn't been until now. This personalized advice is incredibly important, and it is the future of our industry. Customers expect to be able to access their financial data across providers and plan around it. This is a no-brainer. This is something that we've been seeing for years. People are building more and more aggregation tools. That's great. It's what you do with that information that's really powerful. So it's one thing to have a dashboard, but how do you then help people make more of their money and make better decisions because of the data that you have? That's what we're building toward. That's what we've done already, and we keep making better every day. So I used to use mint.com to look at my full balance sheet. I don't anymore. I just use Betterment. It manages my transactions for me. If I've got too high of a balance in my checking account, it automatically sweeps that money over and invests it for me. It does all of these things automatically to make the most of every dollar. And through behavioral data and analytics, this automated advice will increasingly help to improve customer behavior. We can do a lot to manage the money that you've got, but you know what the single biggest way that gets screwed up is you. You come in and you decide that the market's at a top and you want to transact, and we see this time and again in not just our data, but in every company out there who's looked at this problem. The number one reason for underperformance in consumer investing is market timing. And customers get something like 2% annual returns, even though the S&P or a globally diversified index is up something like 8% annually over the past 40 years. Consumers get about 2% returns, barely keeping up with inflation. And the driver of that is not fees. The driver of that is bad behavior. So what do we do about that? That feels important. No company's tackling it. We've just accepted that this is the way it is, that customers are getting screwed. That's not okay anymore. That's not the way the future of advice should be. Advice should take care of you. Advice should help you make better decisions. And the regulators are going to catch up with this. They are coming, I know it, because we have built tools that show you before you make a transaction what your taxes are going to be. And that tool alone, and we've got a whole suite of these tools that do things like that, this tool alone has prevented 75% of tax costly transactions, which not only saves you the tax, it keeps you from making the trade. Maybe you were thinking about doing it, and maybe we made you decide not to. We've convinced so many customers not to trade that the behavior gap at Betterment is, and the behavior gap, I mean what you should earn if you just stayed invested in your returns versus what you actually earn, is less than a quarter of what it is at other firms. We're improving the behavior of our customers by better behavioral design. That's what you should expect from your advisor in the future. Finally, advice should be more aligned. Customers and regulators will push for aligned business models. You've heard me mention regulators a couple of times in this, and they are coming. Just a week and a half ago, the SEC released some guidelines for robo-advisors. They called out robo-advisors in an official release saying, here's some things that we like about this industry, and here's what we'd like to see going forward. Betterment was all over that paper. We were all over it. Some of the words that they're using are directly from their conversations with us. We are closely monitoring the development of this industry and leading it to be in the customer's best interest. We've very publicly talked about our stance on the DOL rule and that this is obviously a customer good and that it's a shame that the current administration is trying to roll it back because that's anti-consumer. We believe strongly that the future of customer advice is about aligned advocacy for what's best for customers. Think about the technology companies that are out there in other industries and the way they advocate for doing what's right for their customers. You should expect that from your financial services provider. In financial services, transparency through technology will result in less products sold the way it has been in the past, the old way of doing things, from the mutual fund warehouses and the brokers that dominate the industry today, toward more advice. There is no large advisor that dominates this space. There is no financial institution that is on your side, fighting for you every day, until now. We are that institution. We believe that we will go away from fund manufacturing toward more personalized investments that are right for you. Less commission-based revenue, more transparent pricing, less kickbacks and third-party agreements. Customer-aligned advice is the future, not just of investing, but of all financial services. Customers know this. They're looking for it. They're waiting for it. We just have to wake them up. We have to show them how much it means to them. Regulators know this. They're looking for it. They're waiting for it. Not only will the DOL rule ultimately go through, the SEC ultimately will pass a rule to build customer-aligned advice for all customers. And our end game is to be the advice provider at the center of your financial life, there because we're creating the most value for you, because we are the only company that you can trust to make the most of every dollar you earn. That's how we earn our keep, because we're an advisor charging for advice, not charging for the products that we sell you. That's the future of advice. These are early days for the changes in this industry. Citi projected a year ago that this market would be $5 trillion in a decade. Morgan Stanley projected 2 or 3 weeks ago that the market's going to be $6.5 trillion in a decade, with an upside case, a bull case of $13 trillion. The estimates keep going up for how big this is going to be. It's obvious that everyone is flocking into this space. Schwab, Vanguard, all of the big old way of investing firms are coming after us. Everyone has to get into this space if they want to be part of the future. But who are you going to trust to manage your money? The firm that's been selling you something for years, or the firm that was created to do the right thing for you and build advice for the future? That's it. Thank you very much. Pleasure to be here. Thank you.